This is not financial advice. I'm recording my thoughts about communication software company Twilio. Twilio stock is currently trading at about $46 with a market cap of about $9 billion. Previously, when it was at $69, I said it's a buy because I estimated a $177 stock price target in 2025. It's currently trading at $46, which is a significant drop from the $69 buy price that I suggested. So I have to go back to Twilio's financial statements and see what has changed and adjust my evaluation to decide if this $46 is a good entry price or a good price to DCA into twlo. The stock price fell to $40 range after they announced their Q3 2022 results, right? So we have to re-examine those results to see if anything has changed. So they grew their revenue at about 33% in the Q3 of 2022, which is more than the 30% that they promised. Dollar retention rate is about 122%, which is still good. But in Q4 of 2022, they only promised about 18% to 19% growth rate. The management actually went back on their promise of 30% revenue growth year on year after they have announced this 18 to 19% growth in the Q4 2022. And when we look into this 18 to 19% revenue growth year on year, we also have to understand that almost 1/3 of Twilio's revenue comes from international customers. Since the US dollar is really strong these days, whatever they make outside of US will get converted back into the US dollars for much less than what it used to. So on a constant currency basis, they would have grown much more than 18 to 19%, but because of strong US dollar, they're suggesting 18 to 19%. Now I'm going to check their gross profit, operating expenses, and stock dilution because they're going to affect my evaluation. So when I look into the financial statement, I see gross margin of about 54% in 2021, and currently it's at 50%. So that is a slight drop, but it's not too significant for me to change my thesis. So I have circled those numbers in red. Now let me look into the blue circles, which are operating expenses. If you look into the operating expenses, last year they had about 600 million and now they are about 900 million. That's a significant increase, almost 50%, right? But when I look into those individual costs, there is a restructuring cost of about $72 million, and that's going to be one-time charge organization. And there's another impairment charge of about $100 million. That is again a one-time charge. Now let's talk about outstanding shares. In my previous evaluation, I have not assumed any stock dilution because Twilio has about $5 billion of cash with them. And when there is a lot of cash within the balance sheet, then we do not expect any dilution. We expect Twilio to buy back any stock-based compensation that they have given. But Twilio seems to have decided not to do that and keep the cash. So 177 million outstanding shares last year to 183 million this year represents about 4% dilution. So since they have decided to do this dilution, I have to consider this in my new evaluation. Now I'm going to do a revised evaluation based off of these facts. Their revenue growth has changed and the stock dilution is happening, right? And that's going to also affect the multiple. So here is my 2027 Twilio evaluation. This year, they're on track to make about $3.6 billion of revenue. With respect to revenue growth rate, I'm only assuming 15%. Previously, I assumed about 30%, right? Because that's what the management's promise was. But now they went back on it. So I want to have a conservative value here because I don't trust them anymore. Once the macroeconomic trends get better, they can reaccelerate this growth, but I'm not counting on it. I'm only going to assume 15% revenue growth rate because I want to be conservative. Based on this, they will make about $7.2 billion of revenue in 2027. Earlier, they were about to make $8 billion in 2025, right? By end of 2025. Now, because of this slower growth rate, they're going to make less revenue. And with their gross margins, they can get to about 20% net profit margins. But I'm only going to assume 15% net profit margin with which they will make about $1.1 billion of net income in 2027. I'm still going to apply a multiple of 20 for this company, with which this company would be worth about $22 billion. And with respect to outstanding shares, they have about 183 million now. As I said before, with the kind of cash they have $5 billion of cash and a $9 billion of market cap, right? So not too much difference. But they don't need to do any dilution, but I'm assuming 6% dilution year on year, with which this company will have 231 million outstanding shares. And when I calculate the stock price in 2027, it's about $94. Currently they're at $46, right? So that represents about 104% or 2x in about 5 years, which is a good gain. And if you had already bought this stock about $69, this $94 represents about 36% gain, which is decent, but it's not going to beat the index. But you need to understand that this is a very conservative evaluation. I'm assuming much lower growth than what is expected. I'm giving it very low net profit margin, and I'm assuming much more dilution than what is possible. So with this evaluation, I personally still think that $46 is a good price for entry into Twilio, and it's also a good price to DCA into Twilio.